stock of the day is Chalice Mining, the explorer and developer with a Greenfield Platinum Group, or the PGE, so-called nickel, copper, cobalt, gold and so on, at its Julimar project in WA, just outside of Perth. The news is that it's entered into a partnership with Northern Resources to potentially acquire a 70% stake in its exploration licence. The area in question, relatively unexplored, but it's believed to hold significant promise for magmatic nickel copper deposits. And Chalice has already provided Northern with $150,000 cash deposits. So Daniel, what are you seeing here with, it's all about green metals, isn't it, Chalice?
Yeah, it is, Andrew. It's one of those huge kind of polymetallic deposits. I think PGE elements, they're more typically found and mined by larger kind of international companies. So a lot of companies involved in South Africa and a lot of Russian companies as well, due to the kind of location of geology there. And when these mines do come online, they're very profitable because you do have a lot of different concentrate streams and revenue byproducts. So think of like the Nova mine, which is owned by IGO. They have a really low cost because they get significant byproduct credits from copper and cobalt. So these mines are hugely profitable, but the issue here is kind of the development work that needs to be put in. So they're very metallurgically complex, and they've probably spent 2 years, or at least a year and a half, in the PFS studies. So they're yet to release that to the market. It's been delayed quite a few times, and that's probably the next near-term catalyst for a company like Chalice. But, this is a huge project. It'll probably be, in development for a long time. And I think some analysts predict that production will forecast to begin around the end of the decade, around FY30. So this is clearly a very long-winded asset. And if you're in it now, you're probably, anticipating some re-rate upwards from studies, or potentially some farm-in or JV agreements, because this is going to be probably a $3 billion capex bill. So it's a sounding project, but there's a lot of kind of wind to go in this company. So from our view, we're probably happy to sit on the sidelines. Usually in these types of stocks, you get an opportunity. The market will give you an opportunity just purely through sentiment, and we've seen that recently in Chalice. It's fallen pretty hard. So I think you will get an opportunity to buy this at a later date, but for us, probably just keep it on the watch list for now.
Yep. Okay, fair enough. As you mentioned, a lot of upfront costs there to consider, but for a longer term play. So Josh, what are your thoughts? Is it too early?
Yeah, it's sort of stuck in between for us. So we want to sort of invest in companies when they, have the exploration phase, or when they go into production. Those are set to be the most profitable times for these types of companies, and it's in that engineering phase of the Lassonde curve. So it is a good project. Look, it's got a market cap of 2.3 billion and yet to produce. So that's on the back of being a tier 1 deposit. One of the things that they've got there that's viable for them for the future is that palladium, and I think a lot of people are sort of pricing that in and betting on that, especially with Russia supplying about 40% of that commodity. So, whether we are, demand globally from Russia, anything at all, especially that palladium, if we can get it elsewhere, I think that's going to come into high demand. So I think it's going to be a good one in the future, but I think right now it's just stuck in that in between phase. So we'd sit on the sidelines as well, but happy to keep this one on your watch list.
Yep. Okay. Well, putting that down then as a double watch for Chalice, certainly showing some potential, but maybe, as Josh says there, sort of at that in-between stage, it's a bit awkward.